Hi, myself is Mrinmoy Chakraborty. I am a financial advisor. In today's session, I am going to discuss the thing that in August 2019, Indian equity markets were largely range-bound and ended the month 1% lower. The developments like escalating trade tension between US and China, FII outflows, measures announced by central government, mid-cap and small-cap indices corrected more than the large caps and continue to underperform large caps during FYTD20. Sectoral indices performance was mixed with IT, auto, healthcare being the best performing sectors, whereas metal, banks and power underperformed. Performance of major global equity indices delivered negative return during the month. Brent crude prices corrected by approximately 7% and closed the month $60.4 per barrel. Prices of most major commodities also corrected except gold. INR depreciated by 3.8% against USD and closed at 71.4, mainly on account of FPI outflows and general strengthening in USD. Consolidation of major PSU banks announced front-loaded the recapitalization of public sector banks with 700 billion rupees as announced in the budget. The surcharge on long and short-term capital gains on equity withdrawn. Housing finance companies to be granted 200 billion rupees of liquidity from National Housing Bank in addition to the 100 billion rupees already announced. All pending GST refunds to be refunded in 30 days and going forward will be processed in 60 days. Debt market updates. It is worth nothing that the gap between 10-year G-Sec and 1-year forward Nifty 50 earning yield has reduced significantly and it is now below 10-year average. This indicates that the market is attractively priced. The yield on 10-year benchmark G-Sec ended the month of August 2019 at 6.56%, up 19 basis points over the previous month end. During the month, RBI transferred surplus of 1,480 billion rupees adjusted for interim dividend of 280 billion rupees to government, including 526 billion rupees as write back of excess provisions for earlier years. This should further improve the liquidity going forward. Annual rate of retail inflation CPI was largely stable at 3.15% in July 19. India's trade deficit fell to 12.3%. India's GDP growth moderated to 5% year-on-year. Growth in gross value added GVA also slow to 4.9%. However, in my opinion, most of the positives are largely factored in and thus yield may not fall significantly from here on. Key risks in the near term: adverse global events, rise in crude oil prices, sharp moderation in equity-oriented mutual fund flows, delays in NPA resolution under NCLT. I am continuing my financial advices since 1999. If you wish, you can feel free to contact me anytime at the following details. Disclaimer: mutual fund investments are subject to market risk. Read all the scheme related documents very carefully before investing. If you like my speech, then please subscribe my channel and share it with other people so that they can be benefited.